Hello, everyone. Welcome to another live stream. So, we have had some big developments in the markets. We have had a massive sell off on stocks. Gold is moving. Crypto is moving a little bit. Oil is moving. So, pretty much a lot of volatility, a lot of movement on every single asset that we can see on my watch list. So, if you guys have any questions, of course, put it in the chat in the YouTube section. I'm a bit under the weather, so my voice may sound a bit differently. So we're going to start first with the open positions. I think that is the best way to start. The first open position I have for you today is going to be gold. Okay, so I'm not sure how long you guys have been following me, but for the new guys, or for actually the old guys, I do have two strategies. Okay, I have the OG strategy, which is purely 1 hour chart, purely price action, no news, no indicators. Okay. And then the second strategy is very heavy on the fundamentals. So heavily depends on fundamental analysis and also depends more on the higher time frames. Okay. So the OG strategy is purely 1 hour chart, but this new strategy is both on the 1 hour, 4 hour, and daily chart. I use a lot of time frames to actually execute the position and then to trail my position as well. Okay, so let me tell you why I took this gold position right here. This was yesterday, okay? And I took it because fundamentals were pretty bullish for gold at this point. The fundamental numbers, the economic numbers were looking pretty bullish. So what I use is I use the software from Trader Nick. The software is called the Edge Finder. It kind of sums up all of the economic numbers, all of the fundamental data so that you don't have to do everything yourself. So it does all the calculations. All the calculations are done automatically. And at this point, it gave a nice bullish reading. So that was the first part. It was the fundamentals. Okay. So I can actually put it down as to how I connected this, how I painted this picture. So first, fundamental analysis. Then the second thing was the macroeconomic picture. Okay. So the macro, you can put economic picture. What is currently happening in the world? So for the macroeconomic picture, you have to ask yourself what is happening. And what is currently happening is we have a lot of uncertainty. We have a lot of fear in the markets. So we have what is called a risk off environment. Now, a risk off environment is bullish for bullish for gold, bullish for the Japanese yen. Okay, so these pairs should go down. EJ, AJ, NJ, they all should go down as the Japanese yen keeps gaining strength. All right. So risk off environment, that was good. Then I actually looked at the daily chart for this one. So daily chart, how is the daily chart looking? And if we go to the daily, at this point, we were no longer very extended as we were a couple of days back. Okay, so at this point here on the top, I could have gone long. I could have gotten in some buy setups, but I decided against it because price was very bullish and it was very extended. So I definitely liked that we pulled back a little bit. Okay, I definitely liked how we pulled back here, so that the price gave me a better entry, gave me a better risk to reward play. Okay. So that was the daily chart. The daily chart was good. Okay, it was good to get in because we had a bit of a pullback. So we were not. I didn't want to buy right at the top of the move. Okay, I don't want to buy at the exact top of the move. Next thing is I actually looked at 1 hour chart for the entry. Okay, so that is what you're seeing right now. This is the 1 hour chart. Looking for an entry here, I saw a nice break and retest. So this is something that if you have been following me with my OG strategy, I would not take this entry with that strategy because we're kind of just breaking out of this flat range. But overall, for this fundamental strategy, I can be a lot more aggressive, you could say. So I actually liked this small uptrend here on the 1 hour chart, small uptrend, okay. And I like the clean close, so I placed a pending buy limit right there. And for the stop loss, so 1 hour chart for the entry, and let's say the 4 hour chart, number 5, 4 hour chart for stop loss. Now, you could do the 4 hour chart, you could do the daily chart, but basically what I did, I just went on the 4 hour. I kind of saw, well, where is a good area to put my stop loss. Initially, I believe it was somewhere here along these lows, but later on I did put it into profit, or not put it into profit, but it made the stop loss a bit smaller. So I actually trailed it a little bit. And that was the basic play on our 1 hour chart. So if we put this back, these are kind of the steps that I went through. Okay, these were the steps that I went through to build this trade. So next, what happened? Well, if we go further, we got taken in, and now the price is running in some, I would say, pretty healthy profits. So I think with the initial stop loss running at around 1.5%, let me check my MetaTrader. So let's open, I'm not going to open it on stream, but I'm going to do it on the phone. And yeah, it's running at around 1.5%. Okay, 1.5 R. So that's pretty good. That's pretty healthy. That's the first trade I have. And I kind of increased my risk a little bit for this trade. I was pretty happy to do it. My plan, just going to trail it. Okay, just going to trail it probably on the 4 hour chart. So if we flip to the 4 hour chart, well, I mean, I could trail it into profit a little bit. I could definitely do that. So I'll think about it. I'll see how the price is moving, but maybe I should move it somewhere in profit just to secure a little bit of the gains. So that is the plan. Currently, my stop loss is, so currently the stop loss is somewhere around here, I believe. Okay, around this low right there. So that's the first trade I have. And the second one, which is, I would say, lower risk. This new strategy, what I have to say is I'm still live testing this new approach. So I'm not slapping on massive risk. I'm just doing lower risk, okay? Is on the euro dollar. Euro dollar, we just broke out of this high. Okay, that's great. And it was way back. I commented on this in the couple of past live streams. I think it was, where was it though? Here? I think it was here. It was a reversal trade, okay, with quite a big stop loss. I had or I do still have quite a big stop loss in this one. So yeah, got in the euro dollar, currently running some decent profit. No, the stop loss must have been bigger, sorry. If we go to the 4 hour, the daily, I think my stop loss was somewhere, or is somewhere alongside like this, okay, alongside this level. So that's the stop loss, small risk because still testing it. So this is more of a, let's say, a feeler trade, more of a testing a new approach. So we will see what will happen with this. Let me go back to the 1 hour chart. Okay, let me just see something about the stop loss in MetaTrader. Have to double check some things. So euro dollar chart. Let's go to chart. Okay, interesting. So yeah, for the euro dollar trade, I will think about what I'm gonna be doing. I think I'm gonna actually close it at this level 1.12. The reason is we are approaching some major resistance. Okay, so these highs are definitely showing major resistance. I don't really want to be going long through these highs, so I think I'm gonna take this position off close to these highs. I'll still think about it. Maybe I will trail it a bit. Let's see the 4-hour. Whoop. Maybe trail it underneath this low. So yeah, I will think about those options, but to be honest with you, I do think the best case would be to take profit here at this resistance point. Okay. So that's about it for the euro dollar trade right there. Now, in terms of other instruments, let's see. 1 hour. So euro dollar we did, pound dollar currently actually trending up a bit. So it's looking okay. Pound dollar looks good. This break is not that big, so I would have liked to see a bit of a more convincing break with a bit more, with a bigger blue candle, basically. Okay, that is what I would like to see to get in on a buy setup straight away. Now we're just kind of breaking the high and retracing. This is, of course, now for the second strategy. So the first two instruments were for the first strategy, but now we're discussing the second one, which is purely on the 1 hour chart and purely technical analysis. So let me quickly browse through this. Yeah. Let's see, GU. I mean, it's, AU. It's looking okay, but it's not the sort of momentum I want to see to take a trade on this 1 hour chart, just purely on technical analysis. So the pound US dollar, I just want to see a bit more of a push, a bit bigger push to the upside, a bit more momentum, and then I would consider a buy setup. Aussie dollar is actually kind of ascending, starting to ascend right here, more of an ascending than a trending play, kind of breaking those highs and retracing. So if we could get a reversal, that would be interesting. What is a reversal setup? It is when we ascend and then drop lower and then start a down trend. Okay, so what you try to get in is you try to get in here on the actual beginning of the reversal. That's a reversal trade. I took it. It's actually on EU. This is a reversal. Oh my God, come on. So this would be a reversal setup. So you see the descending channel right there. You see the momentum to the upside, and then the price kind of retested this level. The price retested these minor highs, you could say. Okay. Let's see, what is this? Okay. Pound US dollar. We covered Aussie dollar. Yeah, ascending. So probably looking for that reversal setup. And currently, I'm going to leave this one alone, actually. Now for the JPY pairs, so let's touch on those. This is a risk-off environment, which should mean Japanese yen actually gains strength. We could take a look on the JXY, which is the index of the strength of the Japanese yen, okay? And you can see it has been going up. So the risk-off environment has definitely been happening. Sorry, let's go to the daily. See, the strength of the Japanese yen has definitely been increasing. So what should happen on our JPY pairs that I'm watching here on my watch list, EJ, AJ, NJ, is they should go down. They should go down in price. And they have been going down, but not really a drastic move. Okay, NJ and AJ have definitely been drastically dropping. EJ has been pretty flat. Okay, so EJ has been pretty flat. What is the reason of what is the reason for the price being so flat on the euro Japanese yen? Well, the reason is that both currencies are pretty strong. So as I told you, the yen is automatically strong because it is a risk off environment, and the euro is actually strong as well because people are kind of fleeing from the dollar, fleeing from also the stock market, and possibly going into the European economy, or possibly going and buying some euros. Europe has increased its spending in terms of the military spending, so they're going to invest quite a bit of money into their military, which is bullish for the stock market. It is bullish for euro as well. Okay, so it is bullish for the DAX. DAX is the, I think, German stock market, DAX. Okay, so now it's dropping because it's a risk-off environment, but it was going up for quite some time, as you can see here. So yeah, DAX, money flowing from the States, probably into Europe, into DAX, into the euro. Okay, so the JPY pairs, EJ would definitely not be a play. In my opinion, if you're looking at purely fundamentals, EJ would not be a play. Again, if you're trading Forex, you don't want both currencies to be strong. You want one currency to be weak and the second one to be strong. So a better play would actually be AJ and NJ, because the Aussie seems a bit weak. New Zealand seems a bit weak as well. And because of that, you can see that the price was definitely trending to the downside, right? So yeah, AJ and NJ definitely dropping lower. Then you had a bit of a pause here, or a bit of an upside move, as we had the Trump tweet. So if you haven't heard about it, Trump is basically putting a 90-day pause on tariffs. It was a sort of a breaking news tweet. Yesterday, I was on the call with the Zentum traders, and one of the Zentum members actually shared in our chat that Trump posted a new tweet, and 90-day pause on tariffs. That is bullish for the markets. So we had some Japanese yen strength, as you can see there, or sorry, Japanese yen weakness, and you had some strength in stocks. See, so the stocks actually rallied to the upside, which is pretty interesting to see. Okay. My plan for the JPY pairs, I'm currently being patient, so currently leaving them alone. The technical analysis doesn't look great either. They're looking kind of flat. They're looking kind of range bound in this area, as you can see. So a bit flat, a bit range bound. I would just wait for momentum up or momentum down. Okay, so that is my game plan. Just looking for a large push up or a large push down. I would prefer to see the price go lower to continue with the risk of environment, right? I would like to see that. Go to the daily. See massive sell-off, just selling off a lot. NJ selling off as well. So if that can continue, that would be great to look for some sell setups on the very short term on our little 1 hour chart. Okay. Now, in terms of news, so I did mention that we had, let's just close this. I did mention that we had the tweet from Trump yesterday, which definitely moved the markets quite a lot. And also today we did have the inflation rate. Okay, so the inflation numbers were released. That's a pretty important number. I think this is good. So we're looking at this one. We're looking at the year-on-year inflation rate. And the previous number was 2.8. Forecast was 2.6. And the actual number came in at 2.4. Okay, so the actual number came in lower than the forecast and lower than the previous number. What does this mean? This is actually bearish for the dollar, because if inflation is going down, if inflation is going lower, well, then the Fed can actually lower interest rates, stimulate the economy, and possibly basically, yeah, stimulate the economy, stimulate economic expansion. That weakens the dollar. So lower interest rates means that the dollar should lose in value. So that's why you also saw that euro dollar went up. We can also go to the dollar index, see it there. Okay, DXY right there. And yeah, just a bearish reaction on the dollar, which is to be expected. And this is also in line. We do have two catalysts. First catalyst is the risk-off environment with all the tariffs. And then the second one is that news that I just, the news that I just commented on, that this being lower, so the inflation being lower is actually bearish for the US dollar. So that's good for my positions. That's good for gold. That's good for the euro dollar as well. So we will see what will happen. Pretty interesting market environment. So as I mentioned, stocks selling off like crazy, but then you had the tweet from Trump, massive reaction. Nasdaq, same thing. Wix is actually going down, if I'm not mistaken. Yeah, going down a little bit. What you need to know about the VIX, it measures the volatility of the S&P 500. And when VIX is very high, the market is most likely selling off. Okay, so when VIX is very high, you will have most likely a massive sell-off in the stock market. And that is what you can see. So look at the S&P, look at the VIX. Okay, so VIX going up, stock market goes down. Okay, so that's the VIX. Then we have silver. Silver is pretty interesting because silver is actually going lower. So you would expect for the metals, you would expect for gold and silver to go in line with each other, to go higher at the same time. But if you look at gold and you compare it to silver, there's a clear difference. So silver looks much more bearish. I'm not really sure why that is. I think silver is used a lot in the manufacturing industry. This is something for me to research, something for me to work on. But yeah, I do think maybe silver is used a lot in manufacturing. And when there's a big risk-off environment, when there's a big scare, well, manufacturing goes down, so silver goes down as well. And also, gold is the most popular. Gold is the most popular. How would you say it? Risk off asset. Okay, gold is the most popular risk off asset. Gold is the most popular safe haven asset as well. So yeah, that's about it for silver. So if we go to the 1 hour chart right there, kind of rebounding a little bit, but still looking very bearish on the daily chart. Okay, it looks very, very bearish on the daily chart. Bitcoin, a bit of a bounce. Ethereum, a little bit of a bounce as well from yesterday. So again, Bitcoin acts as a risk-on asset. Many people believe that cryptocurrency is not that cryptocurrency is a safe haven asset, or that Bitcoin is a safe haven asset. So when there's a lot of trouble in the world, that Bitcoin price will go up. But from what you can see, from all the evidence, you can see that Bitcoin is actually risk off. Okay, so Bitcoin is a very risk off asset, or sorry, I kind of confused that. Many people think that Bitcoin goes up in a risk off environment, that Bitcoin acts like gold. Okay, so people think that Bitcoin is similar to gold, when in reality it is very, very different. Okay, very, very different. Let's see if we're approaching that level. No, not yet. Very, very different than gold. Bitcoin goes down in a risk-off environment. Bitcoin is more like a technology stock. Okay, so Bitcoin is very connected, very much connected to the Nasdaq. Or is it Nasdaq? Yeah, Bitcoin and Nasdaq are much more similar than Bitcoin and gold. I would say there is actually a big, big difference between Bitcoin and gold, if I'm being honest. Ethereum, yeah, just crashing lower. Ethereum looks pretty bad. okay, especially when compared to Bitcoin. Bitcoin is holding up okay, so it's holding up, I would say, nicely. I mean, stocks are selling off massively. Let me see what is the current drop. So the current drop on Nasdaq is 17%. Bitcoin, let's see, 26. Okay, but still, I would say that Bitcoin is holding up pretty well during these tariff announcements. I really thought, I actually believed, and I think also a lot of people believe that as well, that the Bitcoin was going to melt lower with the Nasdaq, right? I think people expected this to happen. So we actually kept steady at these levels, which is good to see. That's pretty healthy. But Ethereum down minus 8% on the day. Whoa, that's massive. That's massive. So Ethereum is down a lot. People really don't like Ethereum. Long term, I do think cryptocurrency is going to go up, if anyone is wondering. So if we go to the monthly chart, you can see that the overall trend is to the upside. But Bitcoin does look a lot healthier. So for my long-term investment into crypto, I'm holding mostly Bitcoin. Okay, so I'm holding mostly Bitcoin, Ethereum. I have a little bit of Ethereum, but I do think Bitcoin is a better option. Okay, DXY crashing lower. Okay, crashing lower. The dollar index is losing a lot of steam, losing a lot of strength, as we can see right here. Just give me 1 second. Okay, I'm back. So basically, dollar index just going lower. The daily is also crashing lower. We have been crashing from January. Basically, when Trump took office, from that point, we have been crashing. And I know 2 things or 3 things that Trump wanted was, first, a weaker dollar, which he was successful in because we went down 8%. Second, I think he wanted lower oil prices. He was successful in that as well. This was the top, see? So right when he took office, down minus 25%, which is pretty interesting, okay? So oil is down. And third thing, which I know he definitely wanted, was lower interest rates, okay? So he wanted lower interest rates for the US dollar, okay? That is definitely something that was on his mind. Did he succeed in that? Well, not yet. We will see what Powell will do. That is the Fed, okay? So that is the central bank of United States. They have a meeting pretty soon, I think. Let me check though. I have it in my journal. So we go to fundamental analysis, interest rates, gallery. So the next Fed meeting is on May 7th. Okay, so there's quite a few weeks to go to May 7th. But yeah, currently Powell, I think, did not mention anything about lowering interest rates. But if the economy goes down, if there's going to be some massive issues with the U.S. economy, he's going to have to lower interest rates. Also, one more thing that we saw today, if we go to the 1 hour, one more thing that we saw today was that inflation is going down a little bit. And that is good for lower interest rates, okay? So lower inflation does mean that we could start seeing lower interest rates because they have sort of the environment to entice market growth, to entice economic growth, and they don't have to, or the Fed doesn't have to battle inflation. So this number is actually good for Trump because this entices the Fed to lower interest rates. And also, if we see a big, you could say, shit show from the tariffs, if we see major economic issues, major economic problems for the US economy, well, then Powell is gonna and the Fed is gonna have to lower those interest rates to stimulate market growth, okay, to stimulate market expansion. Getting back to it, we kind of analyzed the DXY, so looks very bearish. I'm currently very bearish on it. I do have two positions that are counting on dollar strength, okay, or sorry, that are counting on dollar weakness. That is gold, and that is the euro dollar. US oil, as I mentioned, Trump at least stated that he wants lower oil prices. I'm not sure what he was thinking. Does he like that the oil prices are dropping this much? But he definitely got what he wanted. And this chart looks bearish as well. So in a risk-off environment, oil prices should go down, right? And this is also a good measure of inflation. If oil prices are going down, that should mean that inflation is going down as well, okay? So they are correlated. Inflation, oil prices and inflation is correlated. What is the reason? Well, Trader Nick gave a great explanation, because anything that you buy needs to be delivered to you, okay? Needs to be delivered to you by a plane, a truck, or let's say a train, right? So all of those things consume oil. So if oil prices go up, the price for transporting goods goes up as well, and the price of goods goes up, so inflation goes up, right? But if oil prices go down, then it is cheaper to deliver goods, and good prices of goods go down, inflation goes down as well. So is this great for the economy? No. A massive drop in oil prices tends to be actually pretty bad for an economy, right? So yeah, sorry about that. That's about it for the US oil prices. Now I want to quickly touch on some fundamentals. I want to check out some numbers. I want to see which setups are good to take, possibly good to take. For this week, we just have one more day, so we have tomorrow, but maybe for the next week as well. So let's actually open the Edge Finder. Okay, give me just a couple of seconds to adjust this. Trading, Edge Finder. Okay, let's see it. I'm gonna stop sharing Trading View. Let's put this back out. Present, share. Okay. Edge Finder. And this is what I'm looking at. So if we take out the neutral bias, these are the things I'm looking to buy or to sell. So actually, euro dollar, I have it on the list. I'm in a long position. Gold, what happens if I click this? I never clicked on it, but let's see. Okay, so you get a very detailed deep dive into. Oh, okay, that's pretty interesting. I didn't know about this. But anyways, euro dollar bullish, gold is bullish, GBP USD bullish as well. That's also something I'm kind of considering, okay? To sell, I'm not really looking at much. Yeah, I'm kind of focusing on buy setups. So buy setups on risk of assets. I'm currently not looking at much of these to go short. US oil does actually look good to go short, but the rest, yeah, I'm not really that interested. I'm more interested in buying these ones. So that is what I'm looking for. That is what I'm looking for this week, and also possibly the next week as well. I don't think these numbers will change much, except over the weekend, we should get the commitment of traders report. Okay, that is this thing. Now, commitment of traders report tells you exactly what the bigger players, what the institutions have bought or sold in the last week. Okay, and it's a great confluence because if, let's say, institutional money has bought gold in the last week, well, there's a high chance that this week gold prices could go up. Okay, or there's a better chance for the prices of gold to go up than for them to go down, because if a lot of money is in gold, if a lot of money is buying gold, well, then it only has one way to go, and that is to the upside. Okay. Now, another thing I want to go through is where is that heat map? There, US heat map. Okay. Now, this is something that is telling you if the US economy is doing well or if it's doing bad, right? So many people rely on tariffs and the tariff scare. Let me just open this back up. Many people rely on the tariffs and the tariff scare to kind of buy or sell the stock market. But I think the best indicator to see if the stock market is, or if the economy is healthy or not, and if long term everything is going to be okay, well, the best thing to do is to look at these numbers, right? So you look at things such as GDP, retail sales, CPI, PPI, unemployment, definitely, NFP, non-farm payroll, very important. And the recent number that we got was the CPI, right? CPI, we also got US initial jobless claims. So the CPI came in bearish for the USD. That is exactly what I mentioned. So we came in lower than the forecast, right? As you can see here. Lower than the forecast. That means that's bearish for the US dollar, but it's bullish for stocks, because if inflation is going down, that means possibly the Fed will be cutting interest rates. Lower interest rates means a weaker dollar and a stronger stock market, because it stimulates economic expansion. So that is what we got today. And also jobless claims around the same number, so neutral. See, completely neutral, reading a bit higher than the previous number. Okay, so that's interesting. So you could say, because it's higher than the previous number, that it is a bit bullish. But again, it is the same as the forecast, so that would be a neutral reading. And that's about it for the current US economy. So it's kind of mixed. The numbers are kind of mixed. So you can see for the USD and for stocks, you can see some bearish prints, also some bullish prints as well. Looks a bit 50-50, if I'm being honest, right? Kind of 50-50. But what it doesn't look like, it's not looking red. So you have some blue parts as well. It's not all red. If this was all red, that would be a big issue. That would definitely be a sign of a upcoming recession, upcoming crisis, or maybe that we are already in a recession. So the biggest, let's say, lesson that you could take out from this video is basically that you should rely on the numbers. Okay, you should rely on the economic data, not on rumors, not on market hunches, not on someone scaring you into believing that a recession is here. If a recession is really here, if a market crisis is really here, it is going to show in the actual numbers. Okay, it is going to show, because all of this will be red. Okay, you will have a lot less jobs. You will have inflation going down a lot. Okay, you will have basically GDP growth being very negative. So all of this will be red. But for now, it's looking okay. It's not looking like the end of the world. So US economic heat map is actually doing well. So yeah, that's about it for the Edge Finder. Let's go back to the charts. I just wanted to show you some of the things that I was looking at to trade. So yeah, let's go back. Present, share. Okay. back on the charts. Okay. Holy moly, we ripped higher. Damn, why are we ripping higher? Okay, so that's great. Let me check my MetaTrader. Yeah, okay. So I basically decided to close the euro dollar position because we approached some massive resistance, as you can see right here. Okay, massive resistance, or not here, but on the daily. So yeah, we approached this massive resistance. I didn't want to go long or continue going long into that level, so I did decide to close it. In the end, it was maybe like 1 or 2, maybe 2.2 percent or 2.2 Rs, right? 2.2. Pretty good trade. Pretty happy with that. I think there's going to be a bit of a rejection here. I would not be surprised if there's a little bit of a rejection at these highs, okay? Because, mind you, this is the daily chart. Yeah, looking pretty significant here. Looking like some very important points here from 2023 and from 2024 as well. Let me also check if we got executed on my what is it, Alpha Capital. Yeah, it's Alpha Capital. Okay, it did. Check the FTMO. I always want to check these things because it just makes sense. Let's see, price history. Yeah, okay. So everything is good. The trade copier did its job. Happy about that. And the market is ripping higher. That's great. Gold also ripping higher with a lot of momentum still. So definitely gonna trail this position, probably around maybe this level or this low. We'll see. Yeah, I'm a lot less strict with this second strategy. I can be a lot more lenient. I have a lot more freedom when compared to the OG strategy, where I really need to be strict with my rules. Okay, so yeah, basically. Would I be looking for scale-ins into gold? I don't know. I don't think so. I think I'm just going to trail the position, because if we do go up, you know what? If we do break this high, we will be at all-time highs, and then we could see more movement. So if something like this happens, yeah, I could consider getting in some more buy setups, like a scale-in or something. I think that would be okay. That would be good to consider. So gold is my favorite chart of the day. Definitely, gold is looking the best. Pretty interesting again that silver is just looking super bearish. Silver looks so much worse than gold. Just this massive sell-off, and also overall kind of this very ascending channel. I would even say more of a flat range. So it's looking pretty problematic with silver. This just shows you the power that gold has as a safe haven asset, right? So gold is very popular, and a lot of people, a lot of big players, a lot of institutions just fly into gold when they feel uncertainty, when they feel fear in these markets, right? So yeah, it's not strange to see that gold is flying higher. To quickly recap, because I think I'm gonna wrap it up soon. Yeah, I don't have much more to discuss. To quickly recap, gold, have this position, I'm gonna trail it. Euro dollar, I just closed this position because we reached this resistance, right? We reached a very important resistance level. In terms of my OG strategy on the 1 hour chart, I'm actually looking for buy setups right now, to be honest. This looks pretty clean for my buy setups for my OG strategy. I'm not really looking at resistance levels for this. This looks like a lot of momentum. So you know what? Let's put it on the watch list. I'm going to give it this sort of yellow-orange print. Pound. We did break this high. Okay, we did break this high, but we kind of retraced. We didn't get a lot of strength after breaking the high, so not looking the greatest, not looking that interesting, to be honest. Not on the watch list. Aussie dollar, very much ascending. Let me check the edge finder. What's the edge finder saying for the Aussie dollar? AUD USD. It's neutral. Okay, so makes sense. I think both the Aussie and the dollar are kind of weak currencies in this market. Aussie being weaker than the dollar, as you can see here, massive sell-off when we had the tariff announcement. But what I mentioned earlier in the stream, you don't want to buy or sell a currency pair where both currencies are strong or both currencies are weak or both currencies are neutral. In this case, some of the plays that would be bad is Aussie dollar, EJ, because Aussie is weak, the dollar is weak. Euro is weak. Euro is strong, Japanese yen is strong, right? So these are some of the plays for currency pairs that just don't make a lot of fundamental sense. And also on the chart, you can see we're flat. So yeah, Aussie dollar, I'm actually considering or looking for a potential reversal. And that is the reason I'm going to put it on the watch list. It looks interesting. If we can continue with the ascending channel, okay, if we can continue with that ascending, I would be pretty happy to look for some reversal setups and look for some nice sell setups, okay? Something like this. So yeah, it's on the watch list. EJ, as I said, definitely not interesting. I'm not seeing much. AJ, I kind of want to see it go down more. Definitely not on the watch list because looking a bit volatile with this massive sell-off, right? So we had the sell-off, we had this flat pause right there, then we had just the push up when Trump made the tweet. Yeah, JPY pairs are tough. JPY pairs are pretty volatile, so I am staying patient. What I would like to see, as I mentioned, I would prefer to see this melt down. I would prefer to see this melt down because the risk-off environment calls for a stronger Japanese yen. That means AJ should go down. And it is the same thing for NJ. Okay, same thing for NJ. Looks the same. What I'm thinking of just removing NJ from my watch list because AJ and NJ move pretty much the same in the same way. So it doesn't really make sense for me to waste time and analyze NJ. I will consider just removing it from the watch list. I'll still trade it on the side, but just I'm not gonna pay a lot of attention to it. S&P, continuing with the sell-off. I did actually buy some more long-term S&P, okay? My first buy position was here. Second, bought today, okay? This is a very, very long-term hold, so if we do go lower, I'll definitely get some more. So let's say we go back to these levels, I'll definitely buy some more. I kind of missed this level, but that's okay. And if we go even lower, I'll get some more. Let's see the daily. Around this support level, possibly, or this support level, we'll see. So game plan, just keep buying the S&P for the very long term. And that is something that a lot of traders ignore, okay? And that is something that I ignored as well. When I was just starting out, I put all of my money into my personal brokerage account. But what I should have done is I should have put, let's say 30 or 40% of that into the S&P, because if I did, let's say I did it in 2021, let's go to the monthly. 2021, let's see. That is when I kind of started trading seriously. I would be up 43%, right? That's that's really good. I did manage to have a better return with my trading strategy. I do believe I'm going to have to check, but 43% is great. Okay, so as an extra percentage, extra income, that's really, really good. That's really, really high. Even with the drop, right? Before this drop happened, I would be up like, let me check. Okay, let's do it here. I would be up like 64%. That is massive. That is absolutely massive. Okay. So don't ignore buying the S&P for a long-term investment. It's very powerful. I also know Nico from Zentum Trading. Also, if anyone wants to join our free Discord, go to zentumtrading.com. The information is in the description of this video as well. But basically, you can sign up for the free Discord. And if you like it, you can become a paid member and get all the benefits. Get our step-by-step program to get you from zero to consistently profitable, and get access to all of the strategies. So yeah, S&P S&P actually, even though it's dropping, I think it's great as a long-term investment, as I mentioned. And what I was talking about, Nico from Zentum Trading, he also keeps a part of his portfolio in the S&P, and alongside of his trading in 2024, he made an extra like 20 or 30% just from holding the S&P 500. So that's how powerful it is to hold some S&P. Very smart, very powerful. Now, does that mean you should buy an absolutely massive position? Like if you have, I don't know, if you have 10,000 euros, does that mean you should buy 10,000 euros worth of S&P today? No, spread it out. So let's say chop it up into 4 parts. You could get 2,500 today, and then if it goes lower, get more. Or if it goes higher, you could also get some more. But I would definitely do a dollar cost averaging approach, and I would keep buying, especially if this goes lower. Maybe it does. So I would just keep buying as we go lower and lower and lower. So that is it for the S&P. Nasdaq looks pretty similar. Wix still very high, which means we are in a bearish market, which means we are in a risk off environment. Okay, because when VIX goes up, stocks go down. If VIX is going up and stocks are going up, there's a problem somewhere. Okay, that is a big warning sign that something is not right in the markets. Silver, we mentioned, very bad compared to gold, just looks very bearish. Crypto, we have Bitcoin. I mean, it's holding up okay. So what I talked about in the stream is that Bitcoin is a risk on asset. Bitcoin acts like a technology stock. So Bitcoin should sell off massively with the Nasdaq. But actually it held up okay. So the selling was not that bad. What was bad was Ethereum. Ethereum just keeps getting crushed every single week, just keeps getting crushed along these levels. DXY is basically very bearish. Okay, I'm bearish on the dollar. That is why I had the euro dollar long and I have the gold long. So I'm bearish on the dollar. With this whole situation, the dollar could continue losing a lot of value in terms of the macroeconomic picture. US oil. US oil is very bearish, as I mentioned as well, just continues dropping down. So yeah, that's not the greatest for the world economy. You don't want to see the prices melting down on oil so fast. Such a fast meltdown is a good indication of a possible upcoming recession. So I think a lot of analysts will agree. A lot of analysts will agree that oil is a good indication of how the economy is doing. If the oil prices are dropping massively as they have been dropping here, I mean from when Trump took office, it's like a 26% drop. That's a very volatile drop. Good indication that something is not good in the overall markets. But anyways, I'm not an expert in oil, so you should double check everything I'm saying. I'm still getting into these fundamentals, still learning about it, and there's just so much information. Takes a long time to learn. But yeah, gold now dropping a little bit, but that's okay. The two major news events I want to comment on is that we had, so the two major events, we had the tariffs, which were, actually they were on the 2nd of April, and then I had my live stream. Okay, so we already did comment on the tariffs, but again, still in play, or sorry, not the tariffs, but Trump tweet. Yeah, that is what I wanted to comment on. Trump tweet that happened yesterday. Yeah, I think this is the candle. Yesterday, massive candle right there on the S&P. You can see it. It's here. Yeah, that's it. So Trump tweet, that's the first thing I wanted to mention. And the second thing, we had I would say a very important news event, which was inflation, right? Inflation, to repeat, it came in lower than the forecast. Okay, it came in lower than the forecast, which means the Fed has more room to lower interest rates. They don't really have to battle inflation because inflation is going down. So they have more room to lower interest rates to stimulate economic growth, which is bearish for the US dollar. Okay, so bearish for the DXY, as you can see, going down, and a bit bullish for the stock market. But of course, the major news event is still the tariffs, so there wasn't a big reaction on the stock market. We're going to wrap it up here. Hopefully, those of you that are seeing this stream live have enjoyed. I didn't really check the comments, but I don't think there's any comments. Yeah, for those of you that are watching it after the live stream, if you have any questions, put it in the comments. I urge you guys to join our free Discord for Zentum trading. It's absolutely free. I wish you good luck in the markets for the next week. I will keep developing this new fundamental approach. I will keep live testing it with reduced risk, and then I'll see if I fully like it, if I have good results, and then I'll go ahead and bump up the risk to the full 1%, maybe even more. And yeah, I'm going to talk about it in a lot more detail. So far, doing okay. So good luck to everyone, and I will see you guys next week on the live stream. I'm probably gonna postpone the time. So today we had the live stream at 4 p.m. Next week, I'm probably gonna do it at 5 p.m. So it's probably gonna be 1 hour later. For all the updates, check out my Instagram at Marcos Trading Journey. It's in the description of this video, so definitely take a look. I post an update on my Instagram when there is the next live stream. Okay. So yeah, that's about it. Thank you guys very much for watching. See you in the next video.